Most traders glance at their trade performance summary and assume the numbers tell the whole story. But here's the truth. Unless you understand the context of your strategy, how the numbers are calculated, and how they relate to your actual trading logic, they can easily misrepresent reality. Let's walk through this NinjaTrader performance report, line by line, using real data from a strategy called Triangulation, so you can learn how to properly interpret any performance summary. You'll learn not just what each stat means, but whether it actually applies to your strategy and what NinjaTrader might be getting wrong. Or do they? Let's find out. Beginning at the top, our first metric is the total net profit. This is the sum of all realized profits and losses after commission. NinjaTrader calculates this by adding up the P&L from every individual trade, entry-exit pair, subtracts commission, and reports the final amount. In Triangulation, this number is accurate mathematically, but incomplete contextually. Triangulation uses an S-curve order entry method, often accepting small losses along the way. So while some entries are negative, most trade sequences end in profit. And in this report, all trade sequences executed ended with profit. A more accurate interpretation of this is that net profit is real, but it underrepresents how effective the strategy is. Most systems with this net profit level took large risks or large swings. Triangulation managed exposure with precision and discipline. Our next two statistical measurements are gross profit and gross loss. Gross profit is the sum of all trades with positive P&L. Gross loss is the sum of all trades with negative P&L. NinjaTrader calculates these by separately totaling wins and losses before netting them. Every individual entry is evaluated. In Triangulation, the gross loss includes intentional early exits to manage scaling, or what we refer to as position building. And secondly, includes commission-only losses from break-even exits. A more accurate interpretation of this is that gross loss isn't an indication of failure. It's a side effect of entry-level management in an S-curve sequence system. The strategy is working exactly as it was designed to. The commission is the sum of all commissions charged per contract. NinjaTrader subtracts it from net profit, but doesn't always label it clearly when attributing losses. With Triangulation, we're extremely efficient. That number equates to under $6 per trade on average, which is phenomenal for a strategy using this type of order entry method. A good interpretation of this, whether you are using Triangulation or any other strategy for that matter, is this is your operating cost. Think of it like fuel, not loss. And in our case, it's barely noticeable against the gains being produced. The profit factor is the gross profit divided by gross loss. NinjaTrader uses a mechanical division of two values with no awareness of trade structure or intent. In Triangulation, because none of our full sequences closed for a loss, the losses are technical fees or controlled entries. So the true profit factor is infinite because no entire sequence failed. It is important to note that this applies to this week's trades being reviewed. This example was specifically used to point out the objective of this video in the first place, and that is to fully understand what these statistical metrics mean in relation to a specific strategy being deployed, and furthermore, why they may be inaccurate or misleading in certain circumstances. The real interpretation of this is that 73.68 is high, but doesn't do us justice. The real takeaway is this: the strategy simply didn't allow for losing trades, or more specifically, trade sequences. So profit factor is technically irrelevant. NinjaTrader calculates max drawdown by taking the largest peak-to-valley decline in your equity curve before a new high is made. What it actually represents in Triangulation is a brief moment during our order entry method, where cumulative unrealized P&L dipped before the trade sequence was completed and exited profitably. This is impressive because in a strategy that uses an order entry method like this, it's normal to see higher temporary drawdowns. But here, max drawdown never even touched $2,100, meaning entry timing, position sizing, and structure alignment were nearly perfect. In S-curve order entry methods, you'd expect drawdowns to be higher, especially when scaling in multiple times. But with triangulation, $2,017.92 in max drawdown over 143 trades reflects exceptionally tight control and smart reversion entry zones. The Sharpe ratio is a risk-adjusted return metric, average return divided by return volatility. NinjaTrader calculates it by treating each trade's P&L like a return and computes the ratio of mean to standard deviation. In triangulation, because trade-to-trade results are incredibly stable and variance is low, the Sharpe ratio is inflated. A more accurate interpretation of this is that, yes, 40.96 is mathematically correct, and it confirms triangulation's consistency and control, but it's not the reason the system works. It's just the reflection of a system that's designed to remove chaos from profit generation. The Sortino ratio measures your return relative to only the downside volatility, i.e. losses. It's similar to the Sharpe ratio, but it only penalizes trades that fall below a minimum acceptable return. NinjaTrader calculates this by using the average return per trade as the numerator, the standard deviation of only the negative returns as the denominator, and it assumes a risk-free rate of 0%. In triangulation, and particularly in the trades we are reviewing in this report, we rarely closed entries in loss and never lost on a full sequence of trades. So downside deviation, the denominator in the formula, is extremely small, but not zero, which is why Sortino shows as 1.00 and not higher. So why is it so much lower than the Sharpe ratio of 40.96? According to our math, it is likely that NinjaTrader is doing one or all of three things. 1. Flags several of our commission-based break-even exits as losses. 2. Includes early small losses, part of trade sequences, in its downside calculation. And 3. Uses more conservative math for Sortino than Sharpe. The real interpretation of this is that the Sortino ratio being 1.00 means our risk-adjusted return is still solid, but NinjaTrader sees more downside variation than it should because it doesn't understand our order entry logic. In reality, downside volatility is designed into the system as a feature, not a weakness. The risk is predefined, controlled, and neutralized, which Sortino doesn't fully appreciate. While the Sharpe ratio correctly sees consistent gains with low volatility, the Sortino ratio is thrown off by technical entry-level losses, which aren't real threats to the strategy's success. A Sortino of 1.00 is still good, but it underrepresents the strategy's true downside protection. The Ulcer Index measures drawdowns in equity curve, basically how painful the curve was before new highs. NinjaTrader calculates it by taking the average squared percentage drawdown from prior peaks. In triangulation, we don't hold drawdowns long. Even during position-building phases, exits are quick once structure shifts. The real interpretation here is that 0.00 is legitimately impressive. It confirms that our equity curve was smooth, almost no dips, just controlled rise. NinjaTrader's documentation on probability states, this statistic determines how likely a trade is to occur that would return the same P&L as your average trade. This is based on how many trades P&L fall within a standard deviation of the average trade. Students' t-distribution is used to find probability. What this actually means is that NinjaTrader uses statistical inference, not success rate or trade logic, to calculate probability. It analyzes the distribution of your trade profits, how often those profits fall close to your average, and then it uses the student's t-distribution to estimate the probability that the next trade will yield a similar result. This is not your win rate, it is not your strategy's edge, and it is not a prediction of actual outcomes. NinjaTrader's probability stat is best understood as a consistency meter, not a success meter. In a system like triangulation, trade profits vary. Some are $200, others are $10,000, so the distribution is wide. This makes our average trade mathematically solid, but not statistically representative. In other words, We don't try to make $1,077 on every trade. Some sequences close small, some large, and that's intentional. So NinjaTrader looks at that spread and says, well, very few trades fall within one standard deviation of the average. So this must be inconsistent, resulting in a low probability score, in this case, 4.95%. What this really means is that this isn't measuring our success rate, it's measuring how tightly our trades cluster around the average. In triangulation, profits vary depending on market structure, and that's a strength, not a flaw, let alone a weakness. So this number isn't wrong, but it's irrelevant. We don't trade for averages. We trade based on opportunity, and the probability of that has nothing to do with the shape of a bell curve. The total number of trades is simply the count of every entry-exit pair. In triangulation, this number overstates our activity. Many of those 143 trades are position-building entries within the same trade sequence. Triangulation likely made 40 to 60 real trade decisions, but scaled into many of them. If anything, the strategy is more profitable than this makes it look. The percent profitable is the percentage of trade entries that were profitable. In triangulation, this number, oddly enough, is wrong for our system. It counts strategic losses within profitable sequences as bad trades. Though not to be expected, this particular set of trade sequences being analyzed had a win rate of 100%. Again, this is outside the norm to illustrate how to interpret these statistical measurements within NinjaTrader. A crucial detail in analyzing the true performance of any given strategy, the entry-level win rate is irrelevant because triangulation trades the structure, not the outcome of each individual fill. This fact directly affects the true statistics of the next two, the number of winning trades and the number of losing trades. We'll touch on this in a minute in greater detail. The number of even trades are trades with gross P&L of exactly $0. You can see that NinjaTrader reports 0 break-even trades. In reality, triangulation had 33 real break-even trades where the exit equaled our entry price, but commission made their net P&L negative. The real interpretation of this is that these are successful trades. They reflect risk being neutralized, not lost opportunities. NinjaTrader misses this because it doesn't distinguish intent. The average trade, average winning trade, and average losing trade calculates the mean of individual trade outcomes. NinjaTrader is reporting our average trade as $1,077.92, our average win as $1,502.53, and our average loss as negative $54.38. In triangulation, these numbers are skewed. The average loss reflects exit-level losses, not trade sequence failure. In reality, our average win was solid. Our average loss is miscategorized. In order to find the real numbers to these statistics, we would need to use our sequence-level win size to calculate real efficiency, which NinjaTrader does not do. So, these numbers can be ignored in every case. The ratio average win over average loss is exactly what it sounds like. It takes the average win divided by the average loss. In triangulation, this is the same flaw as above. It's based on misinterpreted losses from early exits. So what then is the real interpretation of this? This looks good, but it's not our number. Our win-loss ratio is not definable in this context because we don't take full sequence losses, at least in this data set of trades. Max consecutive winners and max consecutive losers is exactly what it sounds like. In the context of triangulation, in this specific data set we are analyzing, the 21 losses were part of a trade sequence where the overall entries netted profit. These became intentional early exits, not failed trades. Triangulation won every actual trade sequence, so the max losing streak is actually 0. Let's pause for a moment and clear something up about how NinjaTrader defines a trade in these statistics. This is one of the most important things to understand because it explains why certain statistics may look a bit off or even misleading at first glance. This will help clear some things up that causes a lot of confusion, especially for those of you running complex or multi-contract strategies like triangulation. What does trade really mean in NinjaTrader? When NinjaTrader shows you number of trades, it's not talking about what you or I might consider a trade. Here's what NinjaTrader actually counts as a trade. A trade is a matched pair, one entry and one exit. So if I enter a position, then exit it later, that's one trade. Sounds simple, right? But here's where it gets tricky. Example 1, one entry, one exit. Let's say I enter 30 contracts in a single execution, and I exit all 30 contracts at once. NinjaTrader says, that's one trade. That makes sense, and we'd agree. Example 2, same volume, split execution. Now let's say I still trade 30 contracts, but my 30 contracts are filled in 3 separate orders of 10 contracts each. Then exit those contracts in separate stages. NinjaTrader now says that's 3 trades. But in reality, it was the same overall trade idea. You had one entry plan, one exit plan. It just filled and closed in pieces. This is where things get misleading. In the context of triangulation, triangulation doesn't just place one trade and hope for the best. It's built to strategically layer in entries when, and if necessary, as the market moves, then exits the full position when conditions are right. So what NinjaTrader calls multiple trades is really one cohesive trade sequence, one trading idea. That's why the total trade count in your performance summary may look inflated. It's not that you're over-trading, it's just how NinjaTrader slices the data. When reviewing performance stats, remember, number of trades in NinjaTrader equals the number of matched entry-exit fills. But a trade in strategy terms equals one complete position, regardless of how many parts it filled in. This distinction is key when evaluating strategy performance, especially with anything that uses scaling, dollar cost averaging, or position building like triangulation. Let's take a look at the next 2 statistics in the summary. The largest winning trade of $21,480.50 and the largest losing trade of negative $488.16. Now, at first glance, that might seem like a huge win and a small loss, and it is. But it's important to understand what these numbers actually represent inside NinjaTrader. NinjaTrader sees a trade as one entry matched with one exit. So that $21,480 profit, that's the biggest gain from a single filled entry that closed out in profit. But remember, triangulation will sometimes use multiple entries per trade idea, and this is likely just one piece of a bigger profitable sequence. This means that our actual largest winning trade was much higher. On the flip side, that $488 loss, that wasn't the strategy failing. That was one of the early entries that got closed out, either to reset sizing or based on the plan. So even though NinjaTrader lists this as the largest loss, none of the complete trade sequences actually lost money when looking at the net outcome of the trade sequence. In short, these values make sense mathematically, but they don't always match what's actually happening at the strategy level. The average number of trades per day calculates the entry count divided by the number of days, again inflated by multiple entries. Our actual trade decisions per day are much lower, maybe somewhere between 3 to 6. Triangulation is not high-frequency trading. Triangulation is high-precision trading. The average time in market is the average duration each entry-exit pair was open. It is calculated across all completed trades. NinjaTrader measures the elapsed time between when each entry was filled and when it exited. It includes both profitable and losing entries. Our 96.24 minutes, or approximately 1.6 hours, is fairly short term, but not hyper-scalping. Given our order entry method, this suggests that most trades resolve quickly after the final entry. We're not overexposed to prolonged trends or random market noise. This in turn reinforces triangulation's ability to respond dynamically, rather than needing to sit in the market for extended periods to turn a profit. 96 minutes is a strong signal of how quickly triangulation is able to find and close profitable setups, without excessive exposure or sitting in trades all day. It's fast but not reckless, and it's consistent. Profit per month scales net profit to a monthly average. In triangulation, it's directionally useful, but misleading if you had an exceptional week. You're on pace for high profitability as long as trade conditions persist, but you're not scaling just for volume, you're scaling for precision. Max time to recover measures the longest stretch of time it took to recover from a drawdown back to a new equity high. Time is tracked from the start of the drawdown to the point where the equity curve surpasses the previous peak. 0.37 days is extremely fast in market terms. This means even our worst equity dips were resolved quickly and profits resumed without extended stagnation, during the same trading session no less. It's a fantastic stat that reinforces the resilience and profit regeneration speed of triangulation. Even during its largest pullback, triangulation recovered in under 9 hours of market time. That's incredibly fast. It means that the strategy doesn't stay in the red for long and is constantly working its way back to new highs with precision. Longest flat period is the longest duration during which no new equity highs were made. It's a measure of stagnation, how long the strategy went without making fresh profits. It's important for understanding downtime, not just drawdowns. In this series of trades we are analyzing, which spans a period of 5 days, we experienced 7.6 hours without a new high. This is relatively short, especially in volatile markets. It shows the strategy is constantly turning over opportunity, not reliant on rare, massive wins. A flat period under 8 hours means you're not stuck waiting days for progress, which helps investor confidence and keeps capital efficiently deployed. It also tells us triangulation doesn't just have short-term trades, it also avoids stagnation. It's consistently advancing, not sitting idle waiting for miracle setups. The average MAE, average MFE, and average ETD are mechanically accurate but strategically irrelevant to triangulation. Let's break them down to understand why. The MAE is the maximum adverse excursion. It's an indication of risk exposure. It is the maximum unrealized loss a trade experienced while it was open. It measures worst-case drawdown during a trade. For example, if a long trade was opened and price dropped 10 ticks before reversing and closing profitably, MAE equals negative 10 ticks. In our case, this number is misleading because it may reflect the entire move against the total position, but triangulation's order entry method is designed to anticipate this move. So, MAE may look bad, but it's actually by design. The MFE is the maximum favorable excursion. It's an indication of missed profit potential. It is the maximum unrealized profit a trade achieved while it was open. It measures potential profit the trade reached before closing. For example, if the trade reached positive 20 ticks before pulling back and closing at a positive 10 ticks, the MFE would equal a positive 20 ticks. This is misleading because it assumes a trade could have closed at its highest point while open, but triangulation never aims for that peak. We're exiting at a fixed level, which in all cases is the highest profit experienced while in the open position. So, MFE is artificially inflated. The ETD is the end trade drawdown. It's an indication of profit decay before close. It is the difference between the MFE and the actual profit loss when the trade closed. It measures how much profit was given back before the trade was exited. For example, if MFE was positive 20 ticks, but the trade closed at positive 10 ticks, the ETD would equal 10 ticks. In other words, it gave up 10 ticks before exiting. Because ETD subtracts actual profit from peak unrealized profit, this stat becomes invalid in our context because that peak is not our target. It skews results toward missed opportunity that wasn't actually missed, since the profit triangulation takes is the highest profit experienced while in the position, Most performance summaries aren't wrong. They're just contextless. If your strategy isn't built on one-in, one-out logic, then these stats won't tell the full story. Triangulation is about positioning, probability, and control. It doesn't win because of flashy metrics. It wins because of how it handles price movement. So here's the bottom line. Your stats mean nothing until you know what they're actually measuring and whether they reflect your logic, your entries, and your exits. Know your system, read between the stats, and track your performance in a way that reflects reality, not just rounding errors and line items. For more videos like this, click like and subscribe. Be sure to hit that notification bell to be one of the first to view the next training videos. For more information on triangulation, visit grayboxtrading.com.